Do you have a second home or a vacation rental? And are you wondering whether or not you can take the tax credits for solar on those second homes? In this video, we'll cover whether or not those second homes or vacation rentals qualify for the tax credit. So Dale, we get this question quite a bit. People either buy second homes or investment homes that they're using for short-term rentals, and they're wondering whether or not they can take the tax credit, the 30% ITC, on these investments if they've either separately or if they've already taken it on solar on their home. Can they do it?
The reality of it is it can be very, very clear.
Right.
It can also be very, very muddy.
Okay.
So let's start with the ITC,
Right.
the tax credit. There's two different ones.
Right.
So the Section 25D tax credit is for your residents.
Right.
Okay. And it's a very different tax credit from the Section 48 one.
Correct.
What's confusing is that they both start at 30%.
Right.
So I have a 30% tax credit on the residential 25D. If I do that on my house, if I put solar on my house, that qualifies.
Right.
If I have a second home or a cabin somewhere or a beach house, and I don't rent it, but I use it, it qualifies.
Right.
Okay, so that's the easy scenario.
Okay.
That's a 25D. You still get the exact same. You can have two homes.
Right.
You can have a 25D tax credit on both. Where it gets muddy is when you start renting.
Right.
So rental properties are considered commercial because you can take things like depreciation
Yep.
and different kinds of expenses against any income on that property, which is typically what people are doing.
Right.
So if you're doing that and you want to put solar on, 25D does not apply.
Right.
Now you're falling under the Section 48 rules, and there can be some real advantages to this, Warren, because you could be taking advantage of the add-ons
Right.
to the tax credit. So let's say I have a mountain cabin, it's up in northern Pennsylvania, and it's in an energy community. The tax credit on that, commercially, 48, is a 10% added to the 30. So now it's 40%. If I use domestic content, it's 50%, and then I can depreciate it.
Right.
So if I can prove that I'm using it as a rental, and there's tests around this, and we're not tax accountants, so I'm not going to get into all the tests, but
Right.
there's tests as to how much you use it versus how much you rent it.
Okay.
Okay. Ideally, you're using it probably less than 10% of what you're renting it.
Right.
Then it's the Section 48. It's also possible that you may have to prorate it. In other words, you might have to split it.
Right.
And file part of it on 25 and part of it on 48, under 48 guidelines. But anything under the 48 guidelines has that advantage of those adders and the fact that you can depreciate it. I know in situations where people in their own homes also had a business, and they had the solar system purchased by the business and sold the electricity to their house.
Right.
So that they could take those other adders. And so, there's a lot of ways to get creative here. But in essence, most accountants can walk you through that and help you with it. But it's a significant opportunity. Lots of rules around what determines rental properties.
Sure.
Especially if you're using them personally.
And that's an important point, that we're not tax advisors. Consult your own tax advisor when you're exploring this. But it seems to just summarize the 2 points that we talked about now. Very cut and dry. If it's just your single family home and you're putting solar on, you qualify into 25D, you get the tax credit.
Right.
If you have a rental home or you have a second property that you don't rent out but that you use as a cabin or a vacation home and you don't rent it out, yes, you can take it also under 25D.
Yeah. So there's let me say one more thing here.
Yes.
Okay. So under 48,
Yep.
there's passive income tests.
Right.
That's the piece that a lot of people fall down on
Right.
because they don't understand the IRS definition of passive income.
Right.
So if you're taking a 25D, Warren, you take it against your active income and you're good.
Right.
Everything's clean. If you take a 48 and it's a rental property,
Right.
if you don't have passive income tax
Right.
on that property or other passive income that you have, now if you don't owe any tax, you're not going to be able to use tax credit because tax
Right.
credit's not refundable.
Right. It's only on the passive
It's
income.
It goes against the passive.
Correct. And that's the IRS's definition of passive
Yes.
income, so it doesn't include dividends or anything else.
No,
So
because that's portfolio income. It's
Right.
That's technically, I think, what they call it. But it's active and passive are the
Right.
two typical categories. Active, of course, is if you have a business and you're earning money from a business, that's active.
Yep.
If you've got a job and you're just getting a weekly paycheck, that's active.
Right.
The primary source of the passive income is a rental property or a limited partnership where you're not really active.
Right.
That would be the other one where you could get it. But like interest earned on a bank account
Is
or
not-
on the stock market,
Sure.
gains, you might think that's a lot of people think that's passive. It's not by IRS definition.
But that really works well with the intended use. If you are, in fact, actually renting out that property,
Right.
you should be generating rental income.
Yes.
And hopefully be able to, that is passive that you can offset.
It is.
Yep.
Yep.
So on your own home, it's a yes. On your own second home, it's a yes under 25D. Any on rental properties, it's a yes, but.
Yes, that's right.
Yes, but you definitely need to contact your accountant and make sure that you're following the rules, and doing it appropriately.
Yeah. I mean, the bottom line is, Warren, you can do it.
Yep.
It's either under 25, it's under 48. 48, the risk is, can you use it? But yeah, right.
But
immediately.
the upside is there's the risk that can you use it, but then there's also the upside on the 10% adders that could increase
Yes.
the tax credit.
Correct.
on the 48.
And if you can't use it in the current year, you have the opportunity to roll it back. If you could
Right.
have used it any of the last 3 years, and you have the opportunity to roll it forward for 22 years.
Correct.
So
And that going back does not apply to Section 25 on
does
the residentials. That's only commercial.
Right.
And then finally, just to complicate things a little more, Del, let's assume now that it is in fact under Section 48
Okay.
and you've got a farm, but the farm has a house on it. So you have dual use, you have a farm, you have a house. Can they take advantage of some of the 10% adders? Because so we know the 10% adders are only available, they're not available for residential under
Correct.
25D.
They're not.
Only available for commercial. So we have a farm set up where they have a house on the farm and they have a farm operation.
Yep.
Can they take advantage of the adders?
it's going to come down probably to percentage.
Okay.
How much of that usage is going to the house versus how much is being used in even a business? I mean, somebody has a business in their property and they live there too. If it's in the same meter, that could get interesting.
Okay.
It comes down to what's that ratio, and if they have to prorate it, they could use those adders on the piece that's for the business,
Okay.
but not for the piece for residential. If it's less than 10%, there's a chance they can use the whole thing. They just
Okay.
run it filed all under 48.
Yeah.
But don't take my advice for that. I'm not a tax accountant.
No, absolutely. Ask your own tax advisor for this. This is just for informational purposes and how we understand the tax code and how it applies to solar right now. If you found this information helpful, don't stop here. Click like, subscribe, and continue your journey by exploring the playlist on your screen for more expert insights on solar. We've got everything you need to stay ahead and maximize your solar investment. Thanks for watching.